Welcome to Agency Acquisitions and Exits. I'm your host, Peter Lang, and today I'm thrilled to welcome Bryan Wilsher. Oh, we got a CFO on the podcast. He's going to bring a unique perspective to the world of agency M&A. Having transitioned from being a bean counter to working in a creative group that had some headwinds and didn't hit its goals after fundraising, to transitioning to SaaS and participating in highly lucrative and significant exits. And he's navigated complex mergers, guided businesses through major transactions and exits, and now advises founders firsthand as a non-exec on what it really takes to prepare companies for sale and to thrive. There's a lot of setbacks, critical lessons to learn along the way, and I know you're going to get massive value. So let's dive in. Bryan, thank you for joining me.
It's a pleasure.
Okay, help us set the stage for the listener. Take us on that journey where you started your professional career and what got you to where you are now.
Okay, yeah, pleased to do that. I qualified as a UK chartered accountant way back when I was 21. And the background wasn't a sort of a fancy background with big firms or anything else like that, no KPMG or so on. It was a small practice. That set the scene for dealing with SMEs. And the enjoyment of dealing with small to medium-sized enterprises is you're dealing with the owner-occupiers, the people who've got the passion in the business. More, yes, it's about earning money, but a lot of it is also about a lifestyle and a commitment to a vision that they may have and so forth. So I always found that way more fascinating than I did particularly doing the balance sheet or a tax computation or something like that. And that was just good fun to work with those sort of people. And therefore, over the years, I eventually sold my accountancy practice, but went in to swap sides and become a part-time fractional FD of some creative businesses initially. And the other parts of this story, I'm sure, will come out as we go. But spinning that all the way through, I continue now in my years where others sometimes say I should retire. But anyway, I'm still enjoying myself advising SMEs, rather like as a non-executive director. So the experience that you acquire over those years isn't just about the bean counting. It is also about, it sounds mundane, but insurances, legal, employment issues, commerciality in its broader sense, personal ambition and things like that, and family situations and sometimes tough situations, through recessions or through boom times and so on, through banking difficulties. There's a whole range of things where you acquire experience and you can bring it to bear you're always passionate. I'm going to say dispassionate. It's a bit unfair to say dispassionate, but you can bring it to bear in a dispassionate way in the sense that you can have a clear focus where those who are deeply involved are thinking about way too many things and bring a clarity to your client. So that's sufficient for now. That's where I've got through to.
What I hear you saying is you help people see around corners, the small businesses, for things that they quite don't know what's coming. And by the way, let's not just quickly swipe over the fact that you started your professional career in accounting.
Mm-hmm.
You sold it, so you had a transaction, so you exited it, and then you just went AWOL and started working with creative people.
Yeah. Okay, I take your point entirely. That's perfectly fair comment. Throughout that process, one of the things I've always enjoyed doing is, besides being retained by certain clients, not only in the creative sector, but also in software area, through SMEs, but actually get involved and become a shareholder. So typically, and possibly invest. Don't always invest. Sometimes I do, sometimes I don't. And in more recent times, I've been involved in bringing a group of creative businesses together. The single largest transaction I was involved with, and it was a hell of a learning curve, with US private equity investors in a creative business where we raised 15 million and then actually had a subsequent raise. So we overall raised 20 million to bring together a group of disparate creative businesses based in London for the most part. So, and at peak that had sort of 400 employees. And I absolutely delivered the role hands-on, full-time as CFO. So that was interesting. One consequence of that, which I may as well complete this tale, was that the recession came along, interest rates went sky high, and in fact, the company in the end was bought out by another UK company. So the dreams of a very elegant disposal and a very nice big capital gain in that particular instance didn't happen. That was quite a lesson, shall we say. And I also been involved in a couple of software businesses. Again, quite the different sectors entirely. Both of them are built up over a number of years, where I co-invested with the founder, and we exited one to a Danish company and the other, interestingly, to a Swedish company. So both of which were interesting exits, and they are, from the Nordic point of view, they're quite acquisitive as a culture, if you like, and very different to deal with, but very straightforward. And that was actually quite a pleasurable thing. In addition, I obviously helped clients sell their businesses as well, and help them supporting the owners of the business through what can be a pretty damn tough time. It's often said to be easy, but it's somewhat more difficult than you might imagine.
How did you make the cultural leap into the creative agency world from accounting? Because SMEs, add a U to that. Most agencies are unsophisticated, small to mid-sized enterprises. The financial rigor is not quite there. The business acumen isn't quite up to the caliber of the accounting services industries or financial services industries. So how did you bridge that, especially dealing with the creative types?
Very good question. Interestingly, going back to my accountancy days, when I think I probably had, I'm dealing with individuals and small enterprises, some 400 clients, some just literally simplistically doing a self-employed tax form. But there's a number of clients I had, one in particular, which was a design business. They designed packaging, which might sound dull, but actually they did some for major supermarkets. And there was a huge fun factor, incidentally, when you went around the supermarket and you saw packaging that you saw being on the design board some 6 months or so prior. So there was a sense there. And the thing I enjoyed about engaging with the creative sector was, and I think it's to your point, they always actually have to be passionate about delivering creativity. It's something I just simply can't do in the sort of arty world sense of it. And bringing a financial discipline, focus, and really importantly, being able to translate accountancy speak into ordinary language which they could understand. I remember well that one had one particular guy who remained nameless, but he hadn't a clue, and why would he have, what a balance sheet was compared to a profit and loss account. So I literally, and I'm going back to the photocopying days when I literally copied the accounts out on blue paper, yellow paper, green, whatever range of colors were needed. So I was able to guide him to the color of the paper and then explain things. So that's how that transition got made. And I enjoyed the creative sector because probably in terms of being appreciated about the value you can bring to their business, it was right up at the top end of the things that they didn't know about. And why should they? And there's no reason for that. So that's really how that got bridged.
In our prep call, you mentioned a tension between like the suits and the creatives, and that being something that was actually productive, but also elaborate on that a little bit more, because I found that fascinating.
Yeah. And I've always used that expression over quite a number of years. The interesting thing, though, the suits, the people out winning the business, if you like, and managing it through raising invoices to the client and managing client expectations, they were constrained by what the client would pay, if you like, and so on, would get pretty hard negotiations at times. The creatives just wanted to have superb output and they would do 5 versions of something, but the company's only being paid for 3. And that's why I call it, there was this delicious tension between the creatives saying, well, we haven't really finished this we can do better, we can do more. And the suits are going, well, I've got to deliver it on that sort of time. There's a time stop anyway. And anyway, we've spent way too many hours. And there's a classic actually in the creative sector where the overspend versus budget, the discipline of saying to the studio, guys, we've got 100 hours overall, whatever it may be, for this particular project. And often, that could be blown right out of the water. And then they'd wonder why they're not profitable.
Did you, when putting the group together, and there was the creatives who were more attentive to the creative process, and then there's you who's coming in, we're raising money, we're setting an expectation, we have a desired financial outcome, you're placing rigor on those businesses. How did you get them on board Because when I talk to a lot of small businesses who have to make that transition from service leader to small business who can put a lot behind their client work above and beyond maybe a profit target, how did you bridge that dynamic, especially with, talking about the dynamic of multiple brands, multiple founders, multiple deal structures? Like, how did you convince them of that?
I mean, it starts with, if you're talking about putting a group together, and that's not everybody's aim. It's
Cup of
just
tea.
yeah, not everybody's aim to, from individual creative agency ownership point of view. It's not everybody's aim just to build something up and sell it. It's often spoken about. It's worth just sort of pausing on this just for a second. Often spoken about, yes, I'm going to build this up, and in 3 years' time, as one of the comedy shows over in the UK is, we'll be millionaires, as they say. They'll be millionaires. It's way more difficult than that, and it's not everybody's cup of tea. But for those who were willingly coming to the table, including the creatives, which often included the suits and as well, those coming to the table who had already taken the mental leap, if you like, that they wanted this as an outcome, because it would put cash in their personal pockets, their family pockets. You were dealing with somebody who was therefore listening and willingly listening, as opposed, you weren't foisting this upon them. This was something they wanted to engage with. And again, by carefully explaining the financial dynamics, what it is that makes an attractive business to sell or merge, let's just call it sell, an attractive business to sell. Therefore, the things they need to take on board in terms of achieving the most attractive level of profitability and what's called a multiple of those profits as a purchase price, they go, and most of them went, I get it. I want it and I get it. And therefore, that delicious tension I mentioned earlier on just abates, because there's now perhaps an overriding motive, which is for them an important element of their future lives.
So instead of more of an integration, it's almost a change management or transformation process. What were the top few things that you felt every agency or every business typically has as a challenge that gets addressed when you're trying to level up its financial rigor?
Yeah, that's a good question. Another good question as well. It's why you're doing what you're doing, because you're good at asking questions. Interesting, the link between productivity. In other words, so what I typically do, and I can do it for really quite small agencies that are not necessarily about to sell. I had a couple of these quite recently where you're going, you ask the fundamental questions. How many people have you got? So it could be 5, it could be 10, it could be 50, whatever it may be. What's their charge rate? This is quite a little bit detailed. I think it's worthy to have a little bit of detail here. What's their charge rates? How many hours a week do they get in? How many weeks a year does that represent? Therefore, if you add those numbers together, it's very quick and it is a pretty easy exercise, but you have to have a discipline to it and have to be realistic in the expectations. You can't be chargeable 100% of the time. And we are now talking on the finance side, obviously. You look at all those things and go, do you realize, I had one recently where you've got, it's a small team, said you've got 20% too much, you're employing 20% too many people. Your business is capable of producing way more than it's actually achieving. And therefore, by definition, you're either not going to make any profits or you'll make substantially reduced profits. And you can bring those calculations and it's very easily understood. But then the tricky bit starts, of course, if you're saying, well, actually, I've now got to redesign my team. I've got to restructure my team. You then, where I typically say to them, just start with a blank sheet of paper. Fill in the blank sheet of paper about the roles you need in the business. I may be going into too much detail for you at this moment in time, but that's a place to start. And I had this one recently, and it's really, really difficult. And the more difficult people for them then they have done it now to make redundant, were the 2 longest serving people there, who were the most expensive to go, but they were the right people to go because the business had moved on.
Your position in that can be deemed buyer, evaluating companies and saying how can we improve them. When you're doing due diligence on companies, how does that scrutiny play out, and what type of discount do you put on the business if those things are present?
Well, so certainly that sort of monitoring of productive capability, if you like, output value, is but one of a range of things that if you're selling, that you get looked at in the same way as if you're buying. The scrutiny is the same. You get a lot of dreary, and it is dreary, legals when you're looking through, hey, let's look at the contracts, look at the lease of your premises, all that good stuff. And, if we need to go into that side, we can do. But so, yes, the financial analysis is hugely important, but so is, when you address, and this is another quite substantial issue, is the clientele you've got. How sticky are those clients? What's the spread like? Do you have one dominant client? And that's one of often the big things. Most agencies tend to have one client that's a good 30% of their business. And it's kind of strange if they don't. It'd be nice if you had 10 clients, each of them 10%. And the reason they look at that particular thing, for example, they're saying, well, what if that major client, which often big brand names, very typically, suddenly stops trading with you? They just change their mind, they do something different. Recovering from a 30% hit is infinitely more difficult than a 10% client changing their mind. And also, you can replace a 10% client, one would suggest, way easier than building up the rapport with a client that's going to provide pretty well a third of your business. So the financial checks and balances of looking at a business, the discount almost is you probably can't sell, not just if you're at slightly over capacity. And I tell you, the issue will be is that I suspect your profits will not be good enough and attractive enough to really get the multiple of those profits and therefore the outcome that the owners will want. So it's almost self-correcting in that if you want your business to be ready to sell, you need advice on these things. You need to have carried out that analysis, that in-depth look in advance so that your figures are shining and wonderful. You know exactly what the buyer is going to look for. And if you're, therefore, if you are buying, you know what it is. And if you're selling, it's the same set of questions.
I get this question asked of me quite frequently, and it's at what point in the business should I bring on a finance director, CFO type, whether it be outsourced or fractional, of your caliber versus just working with someone who's helping me manage my books. So for the agency, for the business, it can be all types, professional services, right? At the end of the day, when do you typically see people bring you in versus when do you think they should bring in someone of your caliber?
You can get, as one obvious area, if someone's in financial difficulties, at the very point they can't afford to spend any more money on anybody else by that time. So I have been called into those sort of circumstances. So I'm going to put that to one side. That they not necessarily had one where this did happen, and a little while back, probably 6 months ago, and they've actually transformed their business because I brought a number of very quick wins. It was actually low cost, and I wasn't getting immersed in the running of the business. So you have those sort of circumstances. But going back to more your sort of general question, size matters. A tiny business of perhaps 5 people will only ever need quite sporadic advice from someone like me at all. And that may tend to be more of a one-off, or I'll see you this time next year sort of feel to it. When you start getting into the 10s, 20s, 30s, 40s and 50s, number of headcounts, and I don't go much above that at all. I concentrate, as I say, on SMEs. The advice as a watching pair of eyes needs to be there on a consistent basis. So a lot of it goes to motivation. If there's a sense in the business that, we're just not making the right sort of, it doesn't feel right. People can be quite intuitive in that regard and going, we could do with just having, we're not sure perhaps whether our bookkeeper, just using that expression, and I'll come back to that in a second, whether our bookkeeper's quite up to it and whether we're getting the information we really, really need, then there is a trigger point in that process. For sure, one area is the moment the owners, the SME owners, decide we want to get ourselves on the path to a sale, and it's never done overnight. It takes often a number of years. For sure, that is a trigger point. That's a very decisive trigger point. Outside of that, in the ordinary running of a business, which isn't necessarily going to go through to a sale, then sometimes, I guess it can happen mostly where they're chatting to somebody else maybe, and they're going, they'll make a comment about the figures they're getting. They go, well, that's odd. You sure that your bookkeeper is doing this correctly? And I've had situations where you go through, one recently actually, where you go, the previous bookkeeper, fortunately they've changed, was what we're unearthing now, how the business literally was absolutely mission critical. And the roles are quite different. And one of the things that I always want to see as a non-executive director, whether I'm a director is another matter, I want to see is a good, solid, precise bookkeeper. I don't want them to, they don't have to be imaginative. I want solid numbers that you can rely on. And I've seen all too often a bit of that'll do-manship. That'll do. That's near enough. And the trouble is, if you have any sort of slapdash discipline or lack of discipline like that, suddenly, you don't know how big the that'll do is different to reality. So there's never, I don't think, one particular trigger point. There could be a few along those lines. So in growth terms, I would say 10 people, 15, 20 people, you would do well to have some advice. It doesn't have to be expensive. It doesn't have to be every month, but you certainly should.
Going back to the formation of the group and transactions before we transition to the next evolution of your career, you mentioned headwinds, macroeconomic events that demolished the goals of that group. What about the macroeconomic events impacted most of the company? Because we have headwinds now. There's always this concern around the future expectations of markets, currencies, governments, and there's groups being formed today. So if we could go back in time and say, well, Bryan, here's the things to look out for that could have mitigated the performance of that company, given those headwinds, what could we say?
I think it would be probably singularly making sure you're very adequately funded, that you're not underfunded. The particular combination we had was the headwind of recession, and I think this is worthy of a quick look. Climbing interest rates, when you also got bank borrowings. We also had, because of past performance, earnouts to pay. And for those that might wonder what an earnout is, I'm sure many of your viewers will, but often typically you put a down payment and then you say to the people selling the business to you, yep, and if you continue like this and you build the profits up, we're going to pay you another amount of money in a year's time, 2 years' time, 3 years' time, fairly typically in that type of range. So we had a very, and then you get a recession itself squeezing the amount the clients wanted to spend, being more particular about their budgets. And arguably we're in one of those sort of phases at the moment. So that combination of past payments due to past performance, current interest rates going high, and sales being challenged, revenues being challenged, was the particular circumstances there. So having an understanding, if you have backing, the backup of the company, private equity in our case, who would be with you to ride that out, would be the most important, or you had sufficient funds in the first place. So don't overstretch. If you are acquiring, there's always having a sufficient reserve, then is absolutely vital.
If the company is being proactive, but they were using their own balance sheet, so they don't have a financial backer, are there ways you would suggest they modify the deal structures to protect them, or is that really not going to be available to them? Because you're essentially trying to get a seller to believe that we're going to construct a future that could protect ourselves from downside risk. And I've done deals in 2019 going into 2020, and thankfully I had some really fair and balanced sellers who, when COVID hit, we could make slight modifications to the expectations we had set. And that's not always the case when you're working with outside lenders or banks. So what do you recommend someone who's doing M&A or wanting to buy in a climate that's a little bit more uncertain and they don't have access to private equity?
Yeah. And even access to banks. So in the banks, the classic expression is, the moment it starts raining, they want their umbrella back. So, they will be tougher on you. It is really tricky using just leveraging your own balance sheet. Well, let's be careful of the word leveraging. If you've got plenty of cash in the bank and your base, the business that's doing the acquiring is cash generative and putting a lot of cash in the bank over a period of time, over each year, it may well have the resource to weather that type of headwind that you're describing. The nuance in the contract for purchase, I've never seen this done, but I suspect it could be, where you could have, if these circumstances arise, there's an option to delay cash payment. It's always cash that gets you. Whether your share price is notional, unless you're a quoted company, it's just a notional thing that you make yourself either feel good or bad about when you do the maths. So it's always cash that gets you. So really good discipline on the cash, including debtor collection and things like that, but just making sure you have sufficient bank balances, plus an understanding from what you've described. That was a really important issue. Plus an understanding with the owners of the company being acquired that should you need to, you have some wiggle room to change the structure and the payment pacing and so forth, then that's your safest guard you can have to it. Interestingly, though, a seller might look at that and going, there's an interesting thing because they go, well, I've got less and less certainty of getting paid out. And so on. So whether a seller would be interested to have that relationship is an interesting question, and not one I've come across, I have to say.
Yeah, it's a challenge, right? Doing transactions in uncertain times when you're paying present value for future expectations, and the seller's they're being told you're not going to get paid everything they promised you. Mm-hmm. They're going to screw up the business once you give them control. And then, it's this constant pendulum swing of criticism around the future uncertainty and who's more confident in what narrative. Do you find jumping back and forth from representing sellers, helping them and buyer, do you handle that okay? Changing hats, or do you ever find yourself going, there's a little internal dialogue there of what's the most fair way to approach most transactions?
I mean, more recently, in the last number of years, I'm helping the seller. The buyers in large organizations, the last things they are SMEs. So I typically now help the buyer. And the mechanics behind it are very, very much the same. So the buyer will go through, the seller, will go through, it's a tough, and you've seen it, I'm sure, it's a tough process. And you've got to keep doing your day job. You've got to keep bringing those revenues in. You've got to keep the productivity, the profit line going, the cash being generated. And therefore, it's distraction, and it's normally a mighty distraction in terms of this constant requirement for information. Plus, at a time, and this is often overlooked, the human dynamic of you're going to have to work with these people. This applies on the other side, incidentally, that you don't have to work with these people in the future, and falling out with them in some sort of dramatic way. And that is where a corporate advisor to the which I'm not, I don't do that particular role, but having a good corporate advisor on both sides where they go, right, and often the difficult conversations then are held by third parties and not by you directly to who's going to be your new boss, actually, effectively, or bosses. So yeah, there's a lot to be, when you're getting ready to sell, there's a lot to take into account, and it's not just an easy, here it all go flying through in a few weeks. No, it doesn't. Weeks and weeks and weeks, and accountants and lawyers and all sorts of things you've got to get your way through, whilst maintaining your sense of humour and your rapport, hopefully, with your owner-to-be.
Yeah, what I hear you saying is it's two jobs. Selling a business is one full-time job. Running the business that you're trying to sell is another. And keeping your team motivated while you keep a secret from them, a big secret, can be extremely challenging for owners. And then at the end of the day, it's who you have around you that can make that easier. Whether it be Absolutely. Lawyers, counsels, your CFOs, they're the ones who can really help in this period of time.
I mean, it's interesting you say about keeping it a secret. It's probably going to be the worst kept secret going, because it's suddenly if you're working for the company, the bosses are off out going to yet another mysterious meeting. It's virtually impossible as far as I could actually work out. And what's the other thing that's very interesting is a buyer will be particularly interested in continuity. They're risk adverse. They're trying to go, where are my risks in the business? So flight of key people is a key risk. And if you've got high flight risk, you either won't get bought or the price will go down, because they go, well, hang on, I've got to. So very typically, a wise seller would ensure that through, in the UK, an EMI scheme, from a share incentive scheme, that the key people have a vested interest in the outcome and will enjoy some of the fruits of the sale price. And it'll be known to them that they're selling. You won't keep it a secret from them, because often they'll need to be spoken to by the buyer. Will want to actually talk to some of these key people. It's not, and also if you're dealing with a 10, 20, 30, 40, 50 person company, sort of everybody knows what's going on.
No matter how hard you try to keep it a secret.
No matter how hard, in my experience, that's exactly what happens.
Well, along this journey, you started as a bean counter. I'm going to say that in a very lovingly way.
Right. I get it.
But an entrepreneur bean counter at that, and helping small businesses, SMEs. You then transitioned to group formation and creative space, raised capital, helped with the financial engineering around that. And then when that dissipated, You switched to SaaS. You just wanted another group of eccentric people because creatives weren't enough for you. So help us rationalize that.
Was it rational? Actually, it was. I think it was through the Lloyd's Bank meeting of they drew in various clients. I got to meet a particular guy who I'm back in touch with, and he's now dealing with yet another company, having built his other one and sold it. Who had software and was in the SaaS zone, and I liked him. We got on well, and I found it fascinating, and it's markedly different. That's a surprise for you, isn't it? Markedly different to what I was doing. So I actually quite enjoyed the contrast, if you like. And the disciplines there are very different. You're dealing with, to your point, the mindsets are quite different. And you get programmers and the like, you're going who thinking, well, a bit unfair, straight lines, they're very, very focused. They do stuff that I can't even begin to understand, wouldn't even attempt to, and so on. And the combination of the marketing side, the selling side of selling the software is quite a different skill. And this particular company that did eventually sell to a Swedish business, their marketing department were focusing on really large corporate clients. It was a type of software that served large retail, typically retail clients in America and across in the UK particularly, and Europe as well. The main man was not a programmer, or it wasn't on the tech side, but he understood enough. He was absolutely out and out on the sales side. Of the two, you go, that's his core skill. And his partner was on the tech side. So therein lay the combination. So my role was then quite different to having to say to a creative person in a design business and explaining, the link between hours, money, profit. None of that there was no worry that they all got that particular bit. And it was actually this arbitrary pricing of how much this software and how many seats are going to be using this particular software and so on. And seeing them develop both their sales tactics and their product development pathway into the future. This particular company was done very, very good at having really intelligent analysis of how the software will be developed, and not in a haphazard fashion, which ironically, when this chap has now resurfaced, the company's now gone to, it's chaotic. So it's quite interesting. So it's very much more, there's a greater inclination to be disciplined in the SaaS business.
You have a lot of perspectives on acquisitions and seeing a variety of companies execute that. Are you pro? Where would you label your disposition?
It's interesting that. Overall pro, there's a terrible failure rate actually on the nub of it lies, and let's go back to the creative businesses for a minute. The nub of it lies on future relationships going forward. You can get, not so much you can't do it in the creative side, but you can get corporate raiders going to buy in, strip it down, take everything out, fire all the people eventually, get rid of them, put their own people in, and so on. And there's been case history of that, as stretching back as long as you care to think about it. At the SME end, that's not particularly, that's not appropriate because it's not big enough to kind of take that sort of action with. It can be good for both sides if there's honesty and openness with it. Very typically, the sellers will probably be of a certain age. Might be getting to the point of going, do you know what, I want to go and play golf all the time or whatever it may be. Quite happy to serve there 3 years, which is not an unusual period to do it. And then known in advance often to the buyers that they would have their succession plans and so on. And very typically also on this, when you sell, in the contract, there will be a no-touch clause. In other words, a buyer can't just smash you together with another piece of their group and merge you in together, because you won't be able to prove your earn-out, that bit where you're going to get some more money over the next 1, 2, 3 years, whatever it may be. So they can't kind of touch you for 3 years. That doesn't always suit. And I just met somebody yesterday who very successfully sold his business 5 years ago. And in fact, the buyer openly said, we do want to merge you immediately with another part of the business because it just made common sense. And therefore, we'll pay you the lot day one. That's the only time I've come across that. It's a very unusual transaction, but it can happen. So I'm pro it with the right approach, with decent, honest people, if you like, involved in both sides. Remember, I'm dealing with SMEs, not massive corporate mergers and stock exchange and all this sort of old carry on. That has to be present. A trust has to be present. For it can do good for both sides. It can also be a disaster if there's, should we say, skullduggery that's going on.
Are there any lessons from the SaaS period that you think you wish the creatives had, or even you had in your accounting firm? Is there like lessons learned that just apply to the other industries?
Crikey, that's never thought that through. So my immediate reaction is, I don't think so. The disciplines are so profoundly different, actually. The two sides are quite, the fundamental difference of the people the company employs are really quite different. No, I don't think there's anything that I think, I wish I knew that and could apply it over there. I'm not sure that cross pollinations would be appropriate. In my opinion, I've not seen it. That's anything obvious.
Who did you need around you to make you more productive? So I just want to double tap on you in all these instances because you're a CFO level. That means we can't have you like updating the chart of accounts. It's not the highest and best use of your time. So help the listener understand how a company can best support a CFO of your caliber.
Right. Okay. I can answer that very directly. And there's a young lady called Julie, to give her first name. And there's a comedy over in the UK, particularly, which says Me Julie. There's something about called Me Julie. And I always called her Me Julie. Still know her to today. She was a fantastic. So in the group, there was sort of 400 people in. I was CFO, but she was finance director. And then below that, there were bookkeepers. So I'm dealing with a sort of larger firm than, say, somebody who's got 20 people, who've got a fractional bookkeeper that's external, very typically. That's how that would work. So the most solid thing you can have as a CFO is a really good, if you're large enough, a full-time finance director. That was warranted in this case, but you must have a really good management accountant. If I just use that expression, management accountant, whether they're finance director or not, someone who has got the discipline and interest and just the insightfulness to go, I'm now presenting you, CFO, with some accounts that I already know I think are right. And my role is then to look at them for any nuances, make sure they can be explained to the other stakeholders in the business, or maybe to a third-party bank if they're getting bank finance or some sort of investor. So that is my interaction lies there. But I want the confidence that I've been really supported. I don't want surprises. I don't want to suddenly find we've missed out a £50,000 invoice and you go, oh, well, those numbers we made last month, we didn't really, because you can see exactly where that is. That is the thing.
When you finally got your SaaS exit, because you had your business exit, then you had the transactions you were with. Now you got a SaaS exit, which is it's got its own marketability. What did that give to you? Like, what did that unlock for you? Around M&A, around the amount of time you put into building and creating value. Share a little bit about that exit and what it meant to you.
Yep, there were in fact two different SaaS businesses, not connected whatsoever geographically or by sector. Both exited.
Do the first, Bryan, because that was your first SaaS exit. The next one is just you'd already did it before. You were just reinventing the wheel.
Okay, this is going to sound very tired and emotional, but when the first one, I remember I had a portfolio, still have, of businesses that I'm helping to look after. The first SaaS business that I was part of fractional CFO. Again, well supported by a good finance director, senior bookkeeper. So I wasn't needed there full time at all. So when the business was sold, I had piling in the hours. It was literally crucifying because I was the one that would typically organise both responses to financial questions, obviously, but also, insurance policies, this, legal documents, that. And HR questions came up and so forth. And yes, and there were outside support for all that, but it was absolutely very, very straightforward, exhausting, literally. And this sounds absolutely bizarre. When that deal closed, it was April the 1st that it closed at 8:30 at night. To give you some idea of the midnight oil type of stuff that was getting burnt, I literally wept. It was relief, actually, not with anything else. It was just like, it's done. It's done at last. There's that aspect to it. It was nothing happened during the process, which I was surprised by. And I will just cross-refer to one thing here. The style of the buyer and how pedantic they are, how realistic they are, how commercial they are, what their advisors are like. And what you get into with a sale is a gladiatorial conflict between your advisors, who are trying to show you how clever they are. I'm being a little bit, and the buyers, of course, who are also their advisors, who are trying to prove to their client, your acquirer, that they've covered every single inch of the thing and they've been brilliant at what they do and they've unearthed something and so forth. The practicality and the contrast to the second sale could not be more marked. They were very well relaxed. They did their own DD. due diligence, and the stress factor didn't even exist. So it meant a lot. I mean, so it wasn't the money. The sale I've got a sum of money from it, but that wasn't really the point. It was also seeing quite a lot of other people they had quite a few shareholders in the first sale, and each of them getting something. It was actually a good feeling to see that happen.
Yeah. What I hear you saying, the individuals who contribute to the transaction have a significant impact on the pain and turmoil that the transaction has on the people involved.
Exactly.
If you were to describe it, so someone's looking to build out that deal team, what should they be looking out for? What are some of the signs that you have counsel, advisors who are trying to prove themselves and redline everything just to reword it versus others who are going to have a little bit more, I don't want to say lax because it makes it sound like they're not doing their due diligence, a little more ease to the process, or in some respects, with the business.
From get-go, as they say, from get-go, the conversation between the principal owners of the business selling and the principal C board of the ones doing the buying, there's a vital conversation to take place to me. And that is, how are we going to conduct this transaction? How are you going to set by your advisors, your instructions to your advisors? How practical are they going to be? And that is just such an important element. And if they're going to, if you find the acquirer is very sterile, no, I must have some big firm do this and big firm do that, and we're going to have another wave of, and it's going to take 10 months to do, and that's ridiculous. It never takes that long. But then you go, we're going to be in for the worst of the rides. You can get it where you go. The other important area is how small a transaction. Where are they going down to? What's the bottom line? Where are they going to get excited if it's over 50,000 quid? You know, it might be a £50,000 item. I'm not dismissing that either, triply. What's the threshold for that something being of interest and of concern versus, no, it's fine. That's below the level that we're going to get excited about. The corporate advisors to the business, to the seller, again, hugely important role. And they're the ones that need to be robust and going and sort of making sure the buyer is getting real about what has to happen and so on. So there are things you can do just to make sure if you are going to go through hell, make sure you're staffed up. That's the other side of it. You would actually just say, don't just try and do it yourself. Bring in support, for God's sakes. And when I sold this first one, by the way, if I'd known at the end, I think I'm probably answering your previous question. If I'd known at the end what I did at the beginning, I would have actually engaged another person alongside me to help.
Is the pain worth it? So the transaction size has to be meaningful enough to have that level of tension in a transaction. Have you seen that be the constant narrative? Like easy deals don't always have the same level of economic outcome, or is it not that easily categorized?
I don't think there's anything that's just an easy deal. No one comes wafting in and says, here's a few million quid for your business. I'll take a quick look at the books. That'll do nicely. Just sign here. And it's never going to happen in a million years. So there's always going to be effort you've got to put in. And it's quite right. And the other thing, actually, that I probably haven't pointed out, the preparation that you can do as the owner of the business way before you start trying to attract buyers or they come knocking on your door, is just massively important. Your prep time leading up to a sale, before you even get engaged in it, but making sure you have your data room, as it's called, all your information, that your contracts are in place. You know where everything is. You know every single employee's their employment contract is filed away somewhere. Boring blooming stuff. You've got the latest insurance policy on the file, and every client contract's in place. That's signed. Often these things are shown, often the signature's missing or something like that. And your company's house records, the registered records are fine. Your shareholder data, spot on. Go through it and go, if you're going to go in a year's time, we're going to sell, use that year to assemble your armaments. Going, I've got everything. I know what they're going to ask. You just know what they're going to ask. It's the same thing every single time. And you just go, I've got the lot. And I can fire it back to them so fast. That would be quite surprising for them, I suspect. But use it, because that way you're easing the pressure. You're leveling it out over a period of time, not packing it all into a fairly intense, typically 3 months.
You mentioned personally investing into businesses. How did that change your relationship with
Uh,
management teams, the financial oversight?
yeah, massively. I mean, and I loved the change. One would say as well. Typically, if you are coming along as an advisor, you're sackable instantly. I don't have that. If I don't think I'm of use to a company, I just got to go. I don't think you need me anymore. I'm done here. But having a stake in the business fundamentally changes you from being an external advisor to having skin in the game. Doesn't mean you're any less sufficiently detached from the business to give objective advice. It just means the relationship with the other owners are going. He's very much alongside. He's got a stake in the business right alongside us, and they tend to therefore not treat you as a turn-offable resource.
And with that level of attention, what did you care about against the oversight of the business? If you could be terminated and you can move on, yeah, I guess the incentives aren't there, but how do you then care as an investor about how they're managing the business, and how does that differ from maybe from a consultancy?
I don't know. I don't think it's that different. You tend to, if you're having a relationship whereby you're a co-investor in the business or co-shareholder, you probably have had a longer relationship with the individuals concerned. I get investment opportunities pop up time and time again, not quite every week necessarily. And if I'm going to go and co-invest, sometimes that's hard cash. Sometimes it's hard work you don't get paid for. Sometimes it's a combination of those two things. I only want to do it with people that I completely trust, and they need to completely trust me. It's not a one-way statement, and therefore you don't normally have that sort of a relationship until you've worked with somebody for a while. Often, maybe just as an advisor, and then an investment opportunity comes up. But the quality of the advice shouldn't change. I mean, logically, what's logically right is logically right, whether you're an investor or not.
Reflecting on this journey, what's your proudest professional achievement? You've got a lot of wins and you've had a lot of learnings along the way.
Mm.
What are some of the things that, at the end of the day, you're like, that's something I'll never forget?
Yeah, some of them are often quite small things, actually, and it's the human side, actually. It's the human side. You can apply a pound sign and numbers to anything, and it's actually not that. So I can't say, hey, because it made, that made £1 million, that made 100. It's not that at all. It's actually, for me personally, it's when I've made a noticeable, profound difference to those SME owners. And I can think of one in particular. She's gone on to sell her business to her 3 successors. She came to me in the teeth of COVID crisis, etc. She had no one else she could particularly turn to, and just was put in touch with me by somebody that I knew and said, could you help her out? I said, yep. So I chatted to her. And she said, well, how much is all this going to cost? And I just said to her, I'm not charging you. Not yet. We'll worry about that down the line, because you've got enough on your plate. The last thing you want is another overhead when you're fighting your way through a very, very tough position. That wasn't a unique conversation. I've had similar conversations elsewhere. And so when that business therefore fought through and with help transformed her from feeling lonely and desperate because she was the only owner of the business, the only person that was there, to somebody who then could see the thing turning around, and eventually selling the business to 3 junior directors, as they then were, who now own it completely. It sounds ironic. It was a small transaction, nothing glamorous about it, but it made that person's life profoundly different to what it might otherwise have been.
Yeah. The people you touch are the ones you remember. Given that you still have a good relationship with SMEs, even what you're doing now, how do you feel about where the economy is going, the industry is going? What are some of the things that excites you and concerns you?
I suspect at the moment more concerns than excitement. A combination of the UK government change that happened and all the things leading up to it. I'm not going to get party political on that, but but one specific thing that's well known over here is the extra employers' national insurance, and I'm seeing firsthand at an SME level. I appreciate the clients those SMEs have got. The small SMEs, basically, the national insurance increase hasn't really affected them because there was a cushion built in there deliberately for that, which is at least thankful and good news. But what they're seeing in turn is their clients being more cautious with their spend. I've had it said time and time and time again, very recently, over the last number of months, clients are still interested. They're probably squeezing their budgets a bit, but it's taking forever for them to make a decision. And therefore, revenues drop while they're waiting for this decision, and it may eventually, and it often does eventually come through. But in the meantime, they've had to wait, and that wait means there's no revenue or less revenues coming in the meantime. So I think there's a tough position like that. And if you combine that clearly with the US elections and some of the gyrations we've seen recently, and again, I've had various people say we were waiting on an American contract. Client concern now doesn't know where they are with these tariffs 1 minute to the next. And that's a very specific thing. Came up the other day. It's a very specific thing. They're going, we just don't know. They'll place the order eventually, we think. And that uncertainty for all businesses, SMEs and large alike, is really tough to manage through. Pretty tough. So that's what I'm seeing at the moment. Not all doom and gloom. Others are still doing well. It depends, I guess, what sector they're in and so forth. But that's my sense at the moment. There's an air of caution around, an air of uncertainty, and those are never ever good for business planning and building.
You're sitting as a non-exec at this stage of your career, and you're helping a lot of businesses. Help the listener understand why a non-exec is beneficial to them, and then you could do that in the form of a shameful plug, and then tell us why at this stage being a non-exec excites you.
Okay, probably two sides of the same coin, actually. The non-exec role, it's a fancy name very often given. They go, oh, non-executive director, it sounds, and I make the point, I'm not necessarily a director, but it's the best description of the type of role. So it's a role description rather than a specific appointment to the board of directors. And you can have a consultant also taking non-executive type of role with a business. Not a non-exec to an SME, and I'm addressing that particular sector, needn't be silly money. You're not necessarily investing a crazy amount of your hard-earned income into having a non-exec available to you. Often when companies come along and they've got tough decisions, I think I referred to earlier on about the redundancies side of things when they had two roles. It were the worst people to make redundant. Having me consistently say to this particular company, it is the right thing to do. It's heart-wrenching. It's this, it's that. They've been with you the longest. You've got the most feelings for them and all that sort of stuff. But you've got to do the right thing. You've got to do the right thing. Everything you do is not always bad news, incidentally. You're not always the bearer of bad news. And sometimes there's some good stuff. And helping match tax planning, for example, which if you're going to go tax planning, it means you're making money. But so helping people with tax planning just at a personal level. There's nothing fancy in it at all, just saying, no, dividends, salary, how does that work? You've got a mortgage coming up. There's a really great engagement with the personal lives of the owners to whatever extent they wish. So people often just think about tax and money and profits. But then one thing comes up frequently at the moment is, I'm just about to remortgage. Often you're dealing with that age group, but just about to remortgage or they're moving home. And if they've not taken care about how, what salary they're showing, what dividends they're showing and so forth, they go, I've got a problem, I can't get a remortgage. That's a non-financial, it's a financial item, but it's not part of the company structure. So what excites me about the non-exec, to answer that question, which kind of links through, is impact on people's lives, on real people, and just gives them a point of reference. It's for them to make the final decision. What you get with a good non-executive director is a broad sense of experience. So you may go, we want to make this particular decision. You go, but what you haven't thought about is there's an impact over here. And often, and why would they know that impact is coming along? So seeing them being in a more settled, informed position is rewarding.
Indeed. The non-exec is the business therapist to the founders. So you get to go above and beyond just the business, it sounds like, in a way that is not always available to you as a paid consultant doing something on behalf of the business. And so your value extends beyond the company to the individuals, and that's hard to replicate. If someone, Bryan, goes, wow, this is a lot of insights and I want to be able to see around corners, and I don't have any non-exec support at the moment, and they'd like to phone you up, how should they reach out to you?
Well, I'm sure on your email's probably the best rather than phoning me up, because that's, I think it would drive my wife mad if the phone went off within a dozen times. Make contact. I had someone today actually literally doing that. Someone I'd met 7 or 8 years ago has popped up, and through a third party that we knew, and made contact again, and needs help. So a number of things that are important for me is, and this absolutely works both ways, there has to be a good feeling, good rapport very quickly. It's the human level, the human interaction. Geography matters. If someone's based somewhere or in a country where I've got no knowledge of them, they're based in France, I don't know the French tax system, and I'd be unable to help. Certainly sector clearly matters. But anyway, with that, so it is an email contact, which I'm sure you can distribute if you're contacted. That's fine, and explaining that's the best way. And I'm at an age now where I'm not trying to go back to working 80 hours a week, if you follow me, but I don't play golf either, so I'm not planning to retire anytime soon.
We didn't touch on this, so I'd love to end with this last bit, which is, it sounds like you have a great partner, because CFOs and financial types are workaholics. Even at the stage of non-exec contribution to businesses, you still have a passion and interest for companies.
Yeah, that's true.
How important is having a strong partner in creating the type of professional focus that you've had?
It's interesting. As you get older, and my wife has Parkinson's, I'll give you that is a straightforward statement. Therefore, the need to make sure you're around and can care and so forth. But she also understands that, because I don't play golf, if I just sat here and did nothing, whatever that, it wouldn't be nothing. That isn't going to happen, because the brain would turn off or whatever. There's sort of a balance to it. So I keep in my life a very managed balance between myself and my wife. We plan things together, make sure we go on enough holidays. In fact, I've got 1 or 2 people always go, "Oh, you're away again, are you?" And they almost say, "Oh, you're back for a few days before you go away again." I'm being a little bit extreme, but no. And having that fun factor, and we've got a large family as well. 10 grandchildren, a couple of great grandchildren. There's plenty to do around there. So having a partner that understands what makes you tick, and the fact that retirement would actually be, often say, didn't they? Used to retire at 65, and by 67, you're gone. So I think there's that element to it as well. And I wouldn't want to be doing this if it was in huge conflict, and so I would have to think again. But at the moment, it's fine.
Wonderful. Well, Bryan, I appreciate you. Thank you so much for spending some time and sharing some insights with the audience.
I hope it was helpful. Anyway, thank you.